Let's talk about the bank bailout of 2008 in the final video in this banking series. The year 2020 was a history-making year in so many different ways that cannot be denied. It will be a year that none of us will forget, where we all changed in one way, shape, or form. We had, for the first time in our lifetimes, all non-essential jobs and schools closed down for over 8 months. We learned how essential the grocery worker was and how fragile the American economy and household was. You may have heard that the average household didn't have enough money saved in the bank to shelter them in the case of a rainy day. Well, 2020 was a torrential downpour of hardship for so many. And for those who kept their jobs, there was isolation and fear to contend with. We had an outbreak we knew nothing about, and for a while, most people didn't even take it seriously and called it a hoax. I think for sure we all lived through a year there in 2020 that we will not soon forget. But another year that was also very significant was 2008, especially when we're talking about the banks. Because of their mismanagement, subprime loans, and terrible lending practices, the banks that year were bailed out and made a ton of money when the rest of the country was hurting really bad. How many of us know someone personally who had to short sell their home or were foreclosed on? You can watch the movie The Big Short, a film directed by Adam McKay based on the 2010 book The Big Short, Inside the Doomsday Machine by Michael Lewis, showing how the financial crisis of 2007 to 2008 was triggered by the United States housing bubble. The film stars Christian Bale, Steve Carell, Ryan Gosling, and Brad Pitt. For a refresher, if you haven't seen it, prepare to be infuriated by it. Basically, what happened was that the United States Treasury Department forked out $200 billion of the American taxpayers' money. Wells Fargo, Chase, Bank of America, and Citigroup banks had $25 billion handed out to each of them, according to the New York Times. Basically, again, these banks were bailed out for doing something they were not supposed to do. On the flip side, people at this time were losing their jobs, their houses, their income at that time. So did a penny of the bailout go to the taxpayers? No. There was absolutely no taxpayer bailout, and if these folks did dip into their 401ks or IRAs or 403bs for an early withdrawal, they not only had to realize the huge market losses at the time by selling, but they had to pay the 10% early withdrawal penalties, and they were, of course, taxed by the IRS the following year for the additional capital realized as income that year. The variable market strategy is honestly too hard to stomach, and if you're the baby boomer generation, you probably know better than most how painful these market fluctuations have been to your financial nest eggs. There was a huge loss in 2001 when the dot-com bubble burst. I myself was very young back then and just started investing in the stock market and had lost over 75% of my gains at the time, or about $40,000. And I never recovered from that until very recently. Then 9/11 hit and that hurt the markets. Then in 2008, as I mentioned here with the housing bubble and bank bailouts finally in 2020, and frankly, I predict a huge drop in this market for 2021. So if you've been an investor for the last 20 years, you're probably sick and tired of losing so much and are frustrated because you don't know of any other option. You only have the traditional financial advice: manage, diversify, put the cash in different places, all being variable and accounts that put your hard-earned capital at risk. So that's it. That's the end of the video series on banking. Feel free to comment below or send me a message from the healthwealthandrealestate.com website on the Get in Touch link at the top of the webpage, and please like and subscribe to the channel so that you don't miss any future educational videos. I hope you found this series enlightening and educational, and I look forward to chatting in depth about it with you in the future. Have a wonderful day.